Hello, traders. Thanks for joining me this morning. It is 8:04 a.m. Chicago time on Monday, the 7th of October, 2019. Sorry about the delay. There's some weird stuff going on with my broadcasting software. It's very laggy or unresponsive. Anyway, this is episode number 1611. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, it looks like we are really in a bit of a mixed bag here. With gold being the laggard this morning, gold trading at 1503. The bonds are down 20 ticks. The U.S. bonds down 20 ticks, but also the Nasdaq's down 26.75 points. The Nasdaq's trading pretty deep in Friday's range, which was a trend day. The leader this morning is crude up 63 cents, $1.19. We're trading November crude now, and that's how things are shaping up. Uh, the the again the overall picture is that the market's in a mixed mood as we stand. The theme overnight has been the that investors were cautious. They're expecting that trade talks will continue. There's a report that Beijing would likely disagree to a broad deal with the United States. European shares edged higher in a choppy trade, supported by gains in defensive shares. Japan's Nikkei ended lower. The dollar edged up after four straight losses last week, hurting demand for gold. Oil prices were up on supply concerns. That's really where we stand right now. In terms of the calendar for the week, since it's Monday, just looking ahead. Oh, excuse me. Looking ahead, the key release this week is going to be the FOMC minutes. That's on Wednesday. Today, at for high impact events, scheduled events, we have the NAB Business Conference out of Australia. Comes out at 8:30 Eastern this evening. The on nothing on Tuesday. FOMC minutes at 2 o'clock on Tuesday, and then more numbers out of Australia. The US China talks are expected to take place on Wednesday or start on Wednesday. Thursday, we have balance of trade out of Germany, balance of trade out of Great Britain, core inflation in the US. And then Friday, inflation rate out of Germany, employment change in Canada, and Michigan sentiment prelim all on Friday. Those are the high impact pieces for the week. For today, we really don't have much other than Fed's chair Powell is expected to talk at 1 p.m. Eastern. The Fed's Kashkari at 10:20 a.m. Eastern. So look out for Fed's Powell at 1 p.m. Eastern today. That's what's scheduled. We do get a services PMI number out of China this evening at 9:45. Might see a reaction there. So that's what's on deck. What's on deck for this week and for today. Let's get down to our review. It's really weird. I'm having to control the broadcast software with this weird tool. Um, anyway, here's what was expected on Friday. All of these were off. There was no responsive selling at all. The expectation was for responsive selling. Even scenario 4 had responsive selling, open, test down, drive up. What we had on Friday was much stronger. Friday, we ended up with a gap. Here's what that looks like. We ended up with a gap higher and just slightly from 1250 to 1750, and we had pretty much a drive from the open. It was not a super strong drive at the beginning, but a drive nonetheless. And we ended up coming back. You can see here we came back quite a bit. We pulled back quite a bit, but If you look at the open's at 18 quarter, the low's at 1750 before buyers stepped in and took it up and ended up extending the range up. IB high broken to the upside. Remember Friday I was looking for 29, 26.75 as a key tangling area, and it tangled here for just a little bit, but then it pushed through and it got into the upper range, the MC from September 5th till October 1st. The low of that was 29.37. We got to 38.50, and then we ended up just hanging out here at 37.38 right here. Ended up hanging out here until the afternoon where we ended up pushing into the range and getting into this low volume node we left behind from October 1st. Pretty good performance by buyers. We could see the V bottom and the strength coming from Thursday as the sellers just getting squeezed higher. The delta was relatively strong on Friday, and the volume was pretty good. That's 1 million, 1.0 million shares contracts on RTH. That's right in line with what we would call normal. So there's a lot to talk about here, but I'd like to keep this short, as I'm sure many of you would appreciate. It's actually, let's see, not this, this. Let's take a look at the bigger picture for a minute, okay, and what we've accomplished. So what I'm going to do is extend this fiery composite up forward. I'm going to extend it to include all the action through, this was an August profile, and we were, between 28.22 and 29.45, 46. We were in a balance zone, and what I'm doing is I'm extending that to include everything up to this point. You could see that when I do that, we have this low volume node that we're right in the middle of. We're trading right in here right now, 29.43.50, and there's this low volume node where in between these two composite areas, and when we look at all the levels, all the key zones above, we find that there's actually quite a bit that buyers will have to push through. There's got to be some really good news that is likely to push that's likely to be needed to push us through back to 3,000. There's quite a bit that's in the way, is my point. The MC up above is at 79.50. The MC point of control at 79.50, and we are working our way up. However, there's quite a bit here in terms of resistance, and then once it gets into the MC, we have that 29.91, which comes from right here. So overall, it just seems like, with a one-time framing being now down in the weekly time frame, there's likely to be more and more participation on the short side, and therefore more and more resistance, in my opinion, to pushes up. So today, I would consider that longs would likely to be quite challenged, even though we consolidated quite a bit overnight between 35-ish and 37, 38. I'll show you that on the order flow. But what we've done is we've pushed, we pushed into the old MC from August back here. We pushed pretty good into it. I mean, we squeezed all the way down in here, right? And then we had a V bottom, very clear excess low here, and we're bouncing up. We've taken back more than 50% of the drop from last week, from 29.94 down. Remember, this failure to take out 29.91 and hold uh, culminated in a drop down, quite a drop actually, about 150 points, and then we're making our way back up, and we've seen the market kind of climb through a wall of worries as it's been doing since 2010 or so, 2009. But as it comes up here, I could tell you that volume-wise, volume profile-wise, and price action resistance wise, there's quite a bit to get through. This does not mean we ignore the market's ability to climb higher, to auction higher, and just insist on getting short. That's not the point here. But the point is that we're likely to see a lot of battling as the market attempts to climb higher. We're likely to see it fight quite a bit. So that's the main point I want to make with that chart. Looking at the overnight action, completely sideways Asian session, completely sideways here, and then we broke a little bit higher later in the session, in the European session. But overall, nothing to write home about. 186,000 contracts traded, and we have a pretty weak high. The low looks really steady. If you look at that low, look at what's occurred here. We traded quite a bit at the open. It seems like a market on open order went off with size there. It actually looks like a cross to me, a cross trade. But there's hardly any volume at the low. This is an excess low with a weak high. It's likely to continue to squeeze higher. Hang on, I'm going to turn down my news feeds. It's likely to squeeze higher into the 29.50 from Friday. Again, though, just bigger picture, I would expect a fair amount of resistance on the way up. Here's what we've got in terms of order flow. So again, this is CT Bookmap. What is going on here? Oh, I see. All right. Look at this. Look at this zipper here. This is some pretty decent support in case we push down. This is a pretty decent area to lean against, in my opinion, coming into this stock zone between 36.75 and 38.50. We had a pretty good consolidation here, and then we broke higher, collision, pushed through, and is consolidating and kind of flagging out. This looks like an impulse flag and potential continuation into 48. The high is 46.75 currently. So to me, it looks like the high is relatively weak, and it's likely to be taken out on the open for a push into what's above, which is a little more liquidity, especially at the 29.50 close. There's a fair amount of liquidity up here that's been sitting around the entire session. 29.48, 29.50, and 29.50.75 slash 29.51. Expecting this to be an embattled area here once we get there. Below 29.30 provides pretty decent support, in my opinion. And then that would take us into below there, take us into the MC point of control, the prior acceptance area at 29.26.75 from August. Okay, so that's how things look like in the overall heat map picture. Again, full depth. We're able to see hundreds of levels up and down, and that's where things are settling right now. Quite a bit, quite a bit in this area up here of the close. Why do I care about this area? It's because it's got confluence with the prior close stock zone, and then above 29.50, 58 to 60, below 29.30. Okay, so let's take a look at what we're expecting for today. One of the things you'll notice on this next chart here, if I can pull it up, let's see, current screen, there we go. Notice the distance between stock zones below. The distances below, right? There's less structure there, more room. Notice the distances with the stock zones above. Look at how crazy this is. And the reason there's so many of these stock zone areas above is there's just a ton of structure. When we are in balance, we tend to form a whole lot of structure. And I have to start looking in to a smaller and smaller time frame to find potential areas of a response from participants of different time frames. As the market kind of collapses on itself in balance, it generally forms these kind of crazy areas of just there's just a lot there. And of course, I want to remind you that there's no, it doesn't really matter uh, what the stock zone is, if the highest time frame is in action, because if the highest time frame is in action, it doesn't really care about the smaller time frames I'm using to extract those stock zones. And those stock zones are formed from price action, um, based on some statistics, and also based on the volume profile. And so if a higher time frame comes in, it'll zip right through, six, seven, a dozen of them without an issue. So it's important to always consider when trading, and I've said this a billion times before, and this may be the first for you. One of the key things we want to identify early on is who is likely to be in control, and what footprints we use for that as the opening type, which side the action is pushing on, the delta, how much volume is going through, how it facilitates trading for the volume that it's putting through. So this morning, I'm looking for an open auction. Since we are inside of the prior profile, I'm looking for it to push into the prior close. I'm looking for the market to squeeze and clear out the high of Friday. Friday was a trend day, but what you'll notice about Friday is that the point of control remained at the lower end of the range. It never transitioned to the upper quartile. This statistically for me does not represent a trend day. The action represents trend day action, but the point of control remained below. And so I'm anticipating some weakness, quite a bit of resistance there at 29.58 and 60 as you saw in the order flow. And I'm looking for it to turn lower once it tests up to 36.75 and then into that 34 consolidation zipper overnight. This is the day after non-farm payrolls, statistically speaking, not a very active day. The market tends to rest, especially since we had quite a bit of action on Friday. But that's the main scenario. The secondary is an open auction that kind of shifts around, moves down into 29.3675, potentially to 34, impulses up, pushes the overnight high to 29.50, and then consolidates and rests. We end up with a sideways day, a balanced day, a coiling day, an inside day potentially for a rest into tomorrow's session. Tomorrow, if that happens tomorrow, I expect tomorrow to have a much wider range and to have some range expansion and some potential volatility. This is what I'm looking for today. Looking for it to kind of battle both ways. I expect two-way action. I expect both sides to be active today. We'll see once the open takes place. We'll see how accurate that is. But that's how things are setting up currently. Good luck today, and I'll catch you tomorrow morning. Take care.